Hey, what's happening, guys? Dan Dyro here with another Options and Play video update. So, hope everybody had a fantastic weekend. We are just getting things started here for what should be another really super busy week. Just jam-packed with huge names. Google tonight, Apple tomorrow. I mean, plenty more on top of those, obviously. Um, and as things start to move and you start to get these bigger swings in stocks, you start to get a lot of things maybe moving sharply into the money, right? Or you have multiple positions moving at once, and it can be a little bit more challenging to manage certain things. So that's why I always love talking about like trade management. So rolling and cutting risk, right? Like this is one of the really important aspects of options trading. I mean, trade management is important in any form of trading, but I mean, rolling is something a little bit more unique to options. And I felt like we're about halfway through earnings season here, so it was just a good opportunity to kind of revisit it, just go over very quickly. Um, what I like to do for rolling, what and options to play, what I talk about a lot and what we've covered in the past. So just like my idea of rolling, and actually this wasn't even an earnings trade, Disney, right? But it's set up very well as a catalyst trade, and it's ended up working out very well. And it's offered a really nice example of the rolling idea, right? So, long story short, I'm sure you guys all know Disney. Maybe you weren't as, in tune with the chart going into the investor presentation where they debuted the Disney Plus, right, their streaming service. But you know, this had been a multi-year developing pennant, right? I mean, just a really nice textbook pennant. 120 was the trigger, and what I thought was, you know, I wasn't sure that the investor presentation and the launch of the streaming service was necessarily going to be as create as much of a move as it did. But what I knew was that if it broke through 120, that there could be a lot of upside potential, right? I mean, like this is a multi-year trade that's forming, and a pent up move through the top of 120 should have a pretty serious extension, right? So like that was the logic going into the event. So what happened, right? Well, they really knocked it out of the park with their presentation. I think some of it obviously had to do with the fact that they actually gave some firm numbers, which I think people liked. So it actually blew through the top of 120, gapped way through it, right? And it hit the low 130s on the actual day of, well, the day following the presentation. It was a Thursday night. It was Friday. It hit like the low 130s. So that right there is about a 10% measured move through 120, right? Low 130s. It was at 120. Like that was the level. So the July 120 call went deep into the money. So to scale back risk, right? Had a huge 1 day move to the first preliminary 10% extension target. So to scale back risk, what you want to do, and what I talk about a lot is rolling up, right? So when I roll up, I try to stick with the same timeline. So in this case, the original trade, so the July 120 call, right? So timeline, I want to go out to July again, right? So I want to stick with like the July time frame. And the reason why I was originally interested in July was because it would it would go through the next earnings report, right? It might not go through July's, but I wanted to push the bet out to make sure it went through like the next earnings report. So the July 120 call got rolled up into a July 135, 150 call spread. The reason behind that is because when I roll, so like I said, I want to stick with the same time frame. So in this case, July, and then I want the net debit of the roll to be equal to or less than the original debit of the trade. Okay, so the July 135, 150 call spread, the debit, so the roll was less than the net debit of the original 120 call, right? So it's not always like picking. It's not always picking levels. It's more like picking prices when I'm rolling sometimes, because I want to make sure that the net debit of the roll is equal to, probably at the max, preferably less than the original debit of the position, so the original trade. All right. So now you get, the 10% move, you get the roll. Now Disney's kept building. Let me go to the daily chart. So Disney has kept building since that move, right? Just had the initial move, a little bit of a quick digestion, and then started to leg up. Momentum drove it higher, but also people started to get excited about the Avengers debuting, right? The big movie debuting. So then really just it kept pushing and pushing and pushing, and then it hit the 140 level, so like another $10 on top of that into Friday, so ahead of the weekend. So this was even before like the really strong numbers came out over the weekend. So it hit 140. So again, same idea, and another 10 points, so just about another, a little bit less than 10%. So it's like that's what I went over a couple sessions ago. It's like the 10%, 5, 10, 20 measured move extension target. So got up into the 20 range. Cutting risk and rolling, right? So the same idea, stick with the July time frame, roll up to a call spread that is equal to or less than the debit of the rolls in this case, okay? So basically, what you want to take away from this is what I like to do is as things move and they start to hit your targets, sometimes you just want to take the trade, that's fine, but something like a momentum name, right? That in a strong trending tape, maybe you want to stick with the idea. Then the way to manage it is by like this rolling strategy, right? So you want to scale back risk as the thing moves in your favor, right? And then what I like to do is stick with the same time frame, right? Or if anything, sometimes I'll push it through the next upcoming catalyst if it's like within sight. So maybe I'll extend it a couple weeks or maybe even a month if there's like a upcoming significant catalyst on the calendar. Then maybe I'll push it out a little bit longer. But typically stick with the same time frame, maybe a little bit longer, and then the debit of the roll I want to be equal to or less than the original debit of position. Okay, and sometimes like it's more I'm more interested in the debit of the position and less with the actual price ranges of the contracts. But that's just how I go about my rolling strategy, and that's what I talked about a few times in these videos, and we've covered it in our option session. So felt like this was a great example of just like a recent trade that's had a lot of momentum behind it, offered a couple opportunities to roll, and you kind of cut risk. Microsoft was another one that was a multiple roll into earnings. So as we get a little bit extended here, it's going to be as important, maybe not if more important to really start to manage your risk better, right? Because like the chances of a pullback coming are probably a little bit sharper. A little bit higher, and the pullback could be a little bit sharper, right? As things start to really get extended. So I feel like this was a good opportunity to talk about it. Middle of earnings season, hadn't done a video on it in a while, so it's good time just to refresh the idea in everybody's minds. All right, guys. Yeah, plenty to look forward to. A lot of catalyst plays, a lot of earnings. You're going to start getting some biotech events. Actually, it's been kind of quiet on the biotech event front, but that should start to pick up later this month and then into end of May and June because we got some big conferences coming up. So some bios, got some earnings. So plenty to look forward to. All right. So questions or comments, reach out. Love to hear from you guys. Have an awesome night, and I'll talk to you all tomorrow.